Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today. Are you ready to take your investment?
Whoa. All right. Which one's better? That one? That one? That one? That one? That one? Hard to say. All right, let's get to it. So we're going to talk about gold today, the inflation hedge of the century. Gold. Maybe it's not a maybe it's a deflationary hedge. Maybe it's not even an inflationary hedge. Maybe most people don't really even know what inflation is and can't explain it. They're like, well, the chips are more expensive. That ain't inflation. So we're going to get into that. We're going to get into the guts of that, but not yet. First, we're going to talk about market stuff. But what inspired this is I read an interesting article that gold did not have a great day yesterday, which is weird. Or is it? I think it's quite accurate. So we'll get into that. Let's see. Why don't we start with that? And that will lead into the rest of the stuff that we're doing. Bitcoin soars as gold dips. The stellar 12% surge in Bitcoin signals a market shift. The ratio surged 12% Wednesday as the kind of pro-crypto Republican candidate Donald Trump wins the U.S. presidential election. BTC Gold registers its biggest single-day rise since February of 2022. So compared to Bitcoin, gold not keeping up. Renewed uptrend points to Bitcoin outperformance ahead and potential rotation of money out of gold into, well, yeah, but it's not up enough to make up the difference. Donna, up $42 on a $2,400 asset is not enough. A week ago, CoinDesk reported that Bitcoin's price rally is expected to gain momentum as gold loses its bullish edge, prompting a rotation of capital from the yellow metal. And I'm reading this article. I didn't write this article, so this is just CoinDesk's report about what's happening. And then I'll go into why I think it might be happening. And I saw this like working in the gold business. It is pretty obvious that gold is not an inflation hedge. I mean, you had 10 years of deep inflation, and gold did nothing for a decade, just dead money for a decade. So the inflation argument, that's already dead. But then you start to say, well, what is gold then? Like, why would people want to own it? It's like, well, because the government would have to pry it out of my cold, dead hands, or those weird arguments like that people that pull their dentures out have to talk about. So anyway, CoinDesk had reported that Bitcoin's price rally is expected to gain momentum as gold loses its bullish edge. It could prompt a rotation out of gold into the leading assets. I think to an extent, it's not just into Bitcoin. I think it's into probably Bitcoin and to some extent Ethereum. So we'll see. The pivotal moment appears to be here, bolstering the case for continued BTC price as it climbs towards 80,000 and higher by the end of the year. According to the latest developments in the ratio between Bitcoin's price per dollar and gold's price per ounce, Bitcoin, the leading currency by market cap, jumped nearly 10% to record highs above 76,000 Wednesday as the pro-Republican, yes, we get it. Gold fell 3% to 26.58. BTC gold ratio surged 12% Wednesday, registering Bitcoin's biggest single-day outperformance relative to gold since February 28th of 2022. That's a lot. And that's the percentage change, right? So Wednesday's surge confirmed the end of an 8-month-long downtrend identified by trend line connecting highs and lows in March and June. The breakout suggests a renewed outperformance of Bitcoin relative to gold, fueled in part by investors relocating their funds from yellow metal into Bitcoin. Analyzing the Bitcoin to gold ratio, you could see that the downtrend indicative of gold's outperformance since March is starting to reverse. Globally, investors look like they are increasingly focusing on hedging against currency debasement and capitalizing on the Trump trade, both of which favor Bitcoin as opposed to gold. BTC also stands to benefit from the expected regulatory clarity from the digital asset industry and increased institutional adoption under Trump's presidency, as well as a Republican House and Senate that could be more accommodative to regulatory change, which I think is pretty obvious. There is speculation that the Trump administration could build a strategic Bitcoin reserve, although the mechanics of this have not been defined. Meanwhile, gold's fate will likely be decided by the expectations of elevated interest rates under Trump's presidency, which could dent its appeal. So think about this. I'm going to throw this in the back of your mind, and we're not going to go into it yet. We'll do some Q&A and stuff like that. But just in the back of your mind, think about this. If interest rates are high, and I'm not talking about the Fed spamming interest rates, but if interest rates are high, well, let's define that. What are interest rates on the yield curve? Let's make it more simple. What does the yield curve represent? What do you guys think the yield curve represents? It's blank and blank blank. That's all you need to know. Well, it's not all you need to know, but it's all you need to basically understand the yield curve. The yield curve, and we're talking about government debt right now. Bills, notes, and bonds across the government asset. The quality U.S. government collateral, right? A yield curve is growth and inflation expectations, right? It's a measure of that, and you're seeing that what money dealers and participants in money markets are doing based on their belief in growth and inflation expectations. That's right. That's inflation. It's that yield curve is what investors and money dealers expect to happen. No, it's not smoke and mirrors. What the Fed pretends to do is smoke and mirrors. Remember, all they control is the very short end of the curve. Everything else behaves the way it's going to behave. Growth and inflation expectations. Kirill nailed it. Yield curve represents bond traders forward-looking, and it's not just bond traders. Remember, there's going to be other participants in the bond market that aren't just bond traders. But yes, So I would say bond traders and other money dealers and participants, because you also have a lot of people in the government debt. Listen, you got Tether with nearly 100 billion worth of government debt. So they're certainly not bond traders. But anyway, yes, bond traders, money dealers, and other participants, most of them like large scale participants in money markets. And it is growth and inflation expectations in the economy, right? In the economy. We're not talking about stock market, in the economy. And never mind what the Fed does with nonsensical instruments. This is growth and inflation expectations in the economy, the real economy, big E. So when you think about that, you have to say, okay, so what I'm seeing is not, it's not that the yield curve makes the economy, it's that the economy influences these money dealers, bond traders, all these participants. It influences their behavior, their hedging behavior. And what the yield curve is a result of their behavior. They're hedging, they're buying, they're selling, their leverage. That's what we're seeing. So that yield curve gives you a lot of information. And the way that yield curve flops around, regardless of what the Fed does at the short end of the curve, that tells you what people that are closest to the spigot, closest to the source of currency units, that have information that we can only dream of, what they're doing is important, because that's what they believe is happening. And that's why almost, not always, but almost always, the yield curve tells the story of the future. Not exactly, but it tells how the people that are closest to money are dealing with what they believe the future looks like. Again, people with more information, more phone, a better Rolodex than we could ever have. So that's important. So you get a lot of information from that curve. So when you see an upward sloping curve, that's a healthy curve, right? That is growth and inflation expectations. So now how do we do this? You're like, okay, but we're talking about gold. Yes. So think about this. If we have a flat yield curve where there's really no money to be made holding debt, then I might look at that and say, wait, if interest rates are low, then that's an assumption of low growth and low inflation expectations. Therefore, the cost of carrying gold is not high. I don't have a high cost. So I'm not losing out by holding gold. That's also usually a scenario where you're in maybe a deflationary environment. So the inflation argument doesn't quite make sense, because if you're holding gold because inflation, if prices are shooting up and things are becoming more expensive, what do you think is happening in the stock market? Well, just look. What do you think has happened? Growth and inflation expectations. If you see that curve with a big hook upwards, upwards and to the right, oh no, not oh no, oh yes, because now they're having to entice people into the bond market with exorbitant rates, exorbitant yields, because money's leaving those markets and it's going outside those markets. Remember, as the yield goes up, the bond price goes down. The price of the bond goes down. They're inversely proportionate. So if you're seeing an upward, a big up to the right sloping curve, big hook, then what you're seeing is that there must be opportunity outside these debt markets. There must be more opportunity in the economy for entrepreneurship and building and growth and to some extent gambling and leverage and all these kind of things. Stuff is happening. Stuff is happening that you can participate in. Therefore, there is a cost to holding gold. Does that make sense? Because now you could be losing out on all that excitement. And yes, that's another good point, is that undirectly related to gold, but yes, the yield curve is a bullshit detector when the Fed starts talking. And because the bond traders and money dealers and participants in those markets are actually putting currency units at stake rather than putting their napkin down from their luncheon to get up and talk. Big-eared pal. Anyway, And yes, prayers to Howard. He's like the ever ready bunny. There's no stopping Howard. He's going to make it. He'll be fine. So, that's going to kind of lead us. So just keep that in the back of your mind that when rates, when your yield curve is flat or low or gummy, then there's no cost to holding gold. So gold looks attractive. I'd rather be here than there. But when that curve starts moving again, you're realizing there's an opportunity cost. You're losing out by holding gold. That's not the argument that people typically think about, but that's an argument that says maybe debasement is not, directly the gold argument. Maybe inflation is not directly the gold argument. Then you have to say, well, what the hell is inflation actually? Just inflation. What is that? That always and everywhere pervasive monetary phenomenon, right? So, maybe people have it wrong what an inflation hedge, what a deflation hedge are. Maybe they got them flipped backwards. We'll talk about that later because it's a pretty interesting it's kind of a thought experiment, but it's not so much an experiment. When I was in the gold business, I remember I would hang on to what the Fed was saying. That's back when I was an idiot and I believed that anything they said meant anything. I just remember thinking, how come it's not silver seemed to react better to Fed nonsense than gold did? And I was like, why is it not directly correlated? Why they're going to print money? That's back when I thought the Fed printed money. Way back in my dumb days of 2009, 2010. What a dummy I was. What does the Fed print other than propaganda? The Fed prints nothing. The Fed creates bank reserves out of magic. They create coupons. Yeah, that's right, Brett. Coupons. Can you buy a hamburger with bank reserves? Can you buy a burger with bank reserves? No, you can't buy burgers with bank reserves. That's right. Bank reserves aren't money. They are placeholder coupons. And I remember somebody was like, no, it's money into society. I'm like, no. Don't confuse transfer payments for like net stimulus. Central bank. Now, listen, I'm also not speaking for the rest of the central banks. I'm speaking for the non-central bank that's the Federal Reserve. The Federal Reserve is not a central bank. Know that also. It's not a central bank. It's not a part of the U.S. government. None of those 12 private banks is part of the U.S. government. The Board of Governors answers to the U.S. government, and they make policy decisions with their very limited monetary tools, which is kind of funny because those tools are not really tools. Everything they do has to be financed through the Treasury Department anyway. They can't make money. They're not a money maker. They're a bank reserve maker. They are a monopoly money maker. Now, other central banks are set up differently. There is quite a bit of difference between what the People's Bank of China, the PBOC, does and what the Federal Reserve does, right? So, I'm not speaking for the Bank of England, the Bank of Japan, but I know that what the Federal Reserve does is they are not a money dealer. They don't deal in currency units. They deal in, performance theater. They deal in rhetoric, and they are a private group of a consortium of banks with an non-public list of investors that does what's best for the Federal Reserve banks. And sometimes that might be what's best for the U.S. And I think that what gives Powell such flexibility is that he knows nothing they do makes a difference. Interest rate adjustments, it makes no difference. It has a psychological effect. Obviously, there's placebo there. And there's a lot of people that believe that the Fed is a money dealer, and so they act accordingly. So there's a little bit of that performance, right? Like I'm gonna shoot you. I got a gun in my pocket. You're like, and you go and run. They're like, why are you running? Well, he's got a gun in his pocket. That dude doesn't have a gun. That dude doesn't even have a banana. There's no gun in that guy's pocket. Get off the gas. But pretty soon people start going, hey, dude, that guy he doesn't have a gun, man. He has nothing. His fingers are mangled. That's all he's got in his back pocket. He's a creep. He has a foil hat. He lives down in the dumpster by the Starbucks. Oh, that's the Cybertruck? Okay, he lives next to the Cybertruck in the other dumpster down by the Starbucks. So anyway, to kind of reduce all this back, you have inflation, the always and everywhere pervasive monetary phenomenon, right? And what are some ways you can get to inflation? Right? Because just because prices go up don't mean inflation. When you can have a supply shock, as we just saw in COVID, and we had this big supply shock, and we shut the whole world down, and everybody sat at home getting transfer payments, actual transfer payments, real stimmies of currency units, leaving the Treasury Department accounts and going into your bank accounts where you would then spend it. You got a lot of people that were getting paid to not work, mostly, and many of them more than they would have gotten paid. You got a lot of people that got paid to work and kept working. They got double pay. People had lots of currency units. They had real currency units that went, and that's right. That's Craig. That's the decisive thing. The Treasury printer went burr. It went burr. The Federal Reserve did not go burr. They didn't go anything. This was a Treasury function. So people got these transfer payments, and now you have more currency units competing for the same amount of goods. Anytime you're overwhelmed with demand, reduce all your thinking to small e economics, supply and demand. There's $10 and 10 eggs. If I increase the dollars to $100 and there's still just 10 eggs, then those eggs are going to go up in value simply because if the demand is the same, right? And the supply is the same, and all we do is adjust the demand, we increase the demand, but the supply being equal, the price, that's the voice. The moment of truth is in the price, right? So even if demand stays the same and you go the other way, say, okay, what if we cut supply? So now we have $10, we have 10 eggs, and we smash half the eggs. If the demand is the same, so here the demand doesn't go up, but the supply just got cut in half. It's $2 an egg. And again, it doesn't work out exactly like that, but you see what I'm saying? You can reduce a lot of this noise to small e economics. Even a big giant financial system, a big economic system is simply a bunch of small economic games, a small game, theoretical games. You could reduce all of this to the simple, and then things start to make a little bit more sense. And this is where I think that people that are starting to understand what inflation is, you would hope, meaning this always and everywhere, slow, consistent, attenuated, pervasive grinding up of prices, which can be due to a variety of factors. It can be due to debasement, right? An increase in the total currency units in the system, the actual currency units in the system. What inflation is not is a supply shock. That's not inflation. Sure, prices can go up. There's also ways that politically prices can go up. You look at the price of oil back and forth, sloshing around all over the place as these Saudis try to figure out what the F they're going to do with this source that's becoming less and less important than it used to be. So you look at what's going on there and you say, wait a minute, that's not inflation, because on a Friday, we can't have inflation, but on a Monday, that inflation's gone because some Saudi sheik said no to this and yes to this. That's not how inflation works. It's a constant, grinding, slow, churning monster where you are spitting more currency units into the supply. And as more currency units go into supply, the value of each dollar becomes less and less. Now, you can lend currency units into existence or you can print them into existence. It's not really much of a difference. It might feel like there is, but not really. It's pretty much the same. If banks are lending and lending and lending, depending on the collateral situation, that's a form of printing in a sense. You could make the argument if you have governments debasing the currency to kind of, in a way, manipulate their debt situation, that can obviously lead to inflation. So you can have inflation via debasement effects, and that's the money printer. One way or another, through lending or cash and credit creation, that's a form of inflation. It's one of the contributors to inflation. It's grinding, continual, perpetual, like ugly, slow, frustrated. And what happens is everybody's saving money. This is why the term cash is trash. Everybody saving money gets their asses handed to them. They lose money. You know, at 2% inflation, and we know it's not 2%, right? But at 2%, every 20 years, your buying power is cut in half. I want you to think about that for a second. Think about that. Just think. Take the amount of money you have right now, all your savings, all your investments. You think you're going to live 20 more years? Well, guess what? Your shit just got cut in half. Crap. Yeah. Oh, and guess what? Everything else just doubled in price. I mean, it's the same effect, right? Because things become more expensive because the dollars are worth less through these debasement effects, through these kind of, actual inflationary pressures. And you can't buy as much stuff with your money at 2%. If it's 4%, it's way faster. So, I was at one of my clients back in the day. I was like, well, do you have enough to retire? He goes, oh, I think I have enough to retire. I'm like, not in 20 years, you don't. He's like, oh, crap. This guy's like 45 or maybe he's 50. He's 50. Anyway, he's probably got another 40 years in him. Easy, without AGI and science and all the things that Ben Gortz is going to bring us. Wink. So his, I think that time it was like $17 million. It's chopped in half twice. Here, let's call it 20 million, 10, let's call it 5. So his 20 million is going to have $5 million worth of purchasing power. I'm telling you this, if someone said, hey, I got 17 million bucks or I got 20 million bucks in the bank, you're not thinking it's going to be $5 million in a few years, are you? You're thinking you're set. Who here wouldn't be happy with just 20 million bucks sitting? You'd be on Cadillac mode. You'd have nothing in the tank. People call you, hey, you getting up this morning? Hell no. I'm not getting up. I got 20 million. I ain't doing shit. Right? But you should be panicked. It's not enough. I'm always panicked. Always. It's not enough. Nothing is enough, ever. Enough used to be enough. Now enough's not enough. I don't know. I just don't know. So you got to do this kind of math in your mind. You got to run through these things. When you see people say, oh, my house doubled in value over the last 20 years. No, it didn't. It didn't double in value. It's just the dollar's not worth half. The dollar's worth half as much as it was as far as buying power is concerned. Therefore, you have to put your currency units to work. And that's where you get back to the gold argument. The gold, I'll just buy gold because inflation. No. You might buy gold because deflation. Right? You have to have assets that perform. And even Bitcoin, I mean, technically Bitcoin's a non-performing asset, and it's not a direct corollary or it's not a direct inverse, correlation to debasement, or it'd be a direct proportional relationship overall. But Bitcoin's not an inflation hedge. Bitcoin is, and again, I know that's the way it's sold to a lot of people, but that's not what Bitcoin is in my mind. Bitcoin is an asset that you purchase if you believe that, generally speaking, the people that govern us are stupid or greedy or corrupt or in it for themselves. Maybe they're not fully corrupt. Maybe they're partially. Maybe they're Nancy Pelosi corrupt. Maybe, or they're just idiots. And if you believe that they will keep printing, borrowing, lending into existence, if you think they're going to keep government spending, buying missiles and shit like that forever, which that's the way it goes. But if you believe that's going to continue, then you buy Bitcoin because you think, this is probably my hedge against insanity, against bad decision making. Yes, Bitcoin is the bad decision making hedge. And you don't have to look all the way to your government, to government as far as politicians and regulators and all that. You don't have to look very far. You just look around. Go to a Rouse, go to Kroger, go to Starbucks. Just listen for 5 minutes. If you don't hear more stupid shit than you can possibly imagine, I mean, I dare you. I challenge you. You can't do it. You will be dumber after having done so. So it's not just a them. The them that we're talking about, it's everybody, bro. It's everybody. There are bad decision making aplenty. There's so much bad decision making that based on like status quo, we are probably looked at as the bad decision makers. Well, we are, right? We're the gamblers, we're the speculators, we're the, and also it's funny too. Once you kind of know how once you know how money markets basically work, how the gears turn, just the general wide kind of sloppy, obvious ways the gears turn in money markets and in repo, and how banks work and how bankers work and how politicians kind of, push things that they like, and those things cost future currency units, and how you can't really print prosperity, and borrowing from the future to finance a bad version of right now is usually a bad way to be. When you start to look, you sound like a conspiracy theorist. You're like, oh, you're in on those Fed conspiracies. What do you mean? What conspiracy? It's a private institution, 12 private banks. You can read it on their homepage. They're not hiding it, stupid. Probably 1 in 100,000 people have ever been on the Fed's homepage. Probably not even that. I don't even know what the numbers are, but it's like 6 people. So, but you're a conspiracy theorist. If you start actually like lifting the skirt up, being like, oh, this is how you think it works is not how it works. If you think banks actually have a lot of cash, I mean, some of them don't have any cash. Then you probably think that Tether has money. So, and you become a conspiracy theorist. And then you kind of, has anybody noticed this? Those of you that have been in crypto, show of hands. Who's been in the crypto space for more than 2 years? If you're close, 18 months. Who's been in the crypto space 18 months or better? $18 months or better. If you've been in the space 18 months, are people that you know already starting to look at you like you're a little weird or like you're a conspiracy theorist? Ooh, 5 years. Nice. Nice. So that was the first question. Now, because some people be answering the first question. Since you've been here 18 months or more, do people around you in your circle look at you different? So just write, they look at me different, or nothing has changed. They look at me different, or nothing has changed. Closet, yes, you gotta be closet. Man, you'd rather be gay, plural, freaking LGBTQ, PC, RSVP, ASPCA, NAACP before you're a crypto person. They think you're a whack job. And third question, for those of you that have profited from this space, Not only do they think you're a whack job, but do they also think you're lucky? Oh, so-and-so got lucky. Sean got lucky. Brett got lucky. Randy and John, they got lucky. They got lucky. Right? You got lucky. You didn't do the research for years. You didn't take risk money that you earn by trading part of your life and punt it into these crazy ass markets. That's not really what happened. You didn't take those risks. You didn't roll up your sleeves and do the research. You just got lucky. So lucky. So what I've been doing, my new tact is I go with it. I go with the lucky. Not only that, I tell people I've gotten lucky over and over and over. Because when people label you lucky, just lean into it. Say, no, not only did I get lucky, I got lucky in crypto, and then right after that, I got lucky like in the second wave of crypto, just right place, the right time. Am I right? And then I got lucky again in AI. I got lucky again in data. It's crazy. This luck stuff is just constant. It's like you won a lottery ticket and you went and you took all the money from the lottery and you went and you bought more lottery tickets and you won those too. Man, oh man. So since you know you're kind of on your own in a land of dummies, you really have to know how the gears work. And that's why formalizing these kinds of things in your mind is important. Sometimes we talk about stuff on the Tuesday, Thursdays, like it's less about actual investing and more about just kind of locking those gears into your mind. How do those gears work? Because if you're brilliant at the basics, like what defense wins championships, right? If you're brilliant at the basics, and you make a lot of decisions over and over, and you have a bias towards game theoretical kind of critical thinking, then you're going to make decisions on average, on aggregate, better than your peers by a few percentage points. 5% better, 10% better. So because we make so many decisions, those start to add up and you start to leave your peers. For those of you that have also been in the crypto space, doing the research and learning about crypto, has that made other parts of your life either more interesting or less difficult? Like, has the kind of thought processes it takes to peel back all the onion layers of these crypto assets and invest in them, and get on and off exchanges and Web3 wallets and all this crazy stuff, has it made other parts of your life seem easier? To me, it has. I mean, I'm still a complete dick when I play video games and I cuss a lot and I'm just a generally mean person, but not where it comes to tasks. Where it comes to tasks, it's life just gets easier because it's a staccato of game theoretical thinking. You're being brilliant at basics, not just investing though, Mark. I'm talking like all throughout your life. When you start, because to be good in crypto, cognitive bias also, yeah. To be good in crypto, you have to be game theoretical. You have to get out of your way of your cognitive biases. Well, that's not true. There's people that gamble in crypto and they do okay, but they eventually give it all back because gambling's not a strategy. Guessing and luck is not a strategy. So you get better at the little things because you're brilliant at the basics, and it makes other parts of your life much, much easier. And sometimes it's not a direct correlation. Like you're like, wait, why does understanding money markets and why does understanding repo and this concept of like collateral being repledged by 6 different parties, why is working my way through those things mentally, why is that important? Because it gives you a tool set for working your way through all complex things. And if you can start to imagine these things the way they really are, there's less mystery. I forget who was telling me this. I think it was like a biology teacher. It's a biology teacher, or like a somebody when I was in high school. Oh, matter of fact, I remember the dude's name, Reichley. The guy's name was Reichley. He was all fucked up too. He had like a bad leg and everything. This dude was smart. He did his fingers in a weird way. Like he would do like that, like really smart people do. They'll have like a little tick. Anyway, but what he said was, he said, once you understand how the universe operates, there's no more mysteries. And you're no longer scared in the dark. You no longer look up at the stars like, oh, wow, like wonder. I'm paraphrasing here. I don't remember his exact words, obviously. It was like ninth grade. But Reichley basically said, like, there's no more mystery. There's no more surprise. Things are what they seem. If your assumptions and your conclusions on those assumptions are concrete and based on good fundamentals, then there's no more magic. There's no more fantasies. You can pretty much go into a room and you pretty much know how things are going to turn out. You just know, right? You can see social situations propagate out. You just know in advance. And it's like you can read the future. Like, think how many people look up in the sky like, wow. Like, you know that all those stars are already mostly gone. If anything you see, those stars have already burnt out hundreds of millions of years ago. They're gone. There's a whole new set of stars we can't see because the light hasn't reached us yet. What? Yeah. Start hydrogen and helium, then lithium, beryllium, then we got clouds, and those dense clouds. Anyway, it takes the mystery away. So when you dig into the crypto space, it forces you to dig into finance. And when you dig into finance and understand how the gears turn, then you look at that big, murky, bullshitty thing where normally we'd have to take advice from everyone else, and you go and you can call it out for when it needs to be called out, when people need to be called idiots. You can call it out and say, that's bullshit what he's saying, or that's bullshit what they're trying to push on you. Oh, well, just do this. No, why would you do that? That's stupid. That doesn't make any sense. Those people are gaming you. Those people are, stop it. So if you're brilliant at the basics, and guess what? You don't have to have a high IQ to be brilliant at the basics. I was always frustrated because I had some friends like growing up that were really, really intelligent, super smart, no books, nothing, just nailed it. I mean, my roommate in college he's the head of stem cell research at MIT. My other roommate runs like a big part of a hospital. I think he's in Mississippi, which is weird, but whatever. So like smart people, right? Molecular biology, organic chemistry, like smart people. And I was like, oh man, I like to race go-karts. So it was always frustrating when people just seemed inclined towards, high IQ numbers. So I just had to read things over and over. Sometimes there's still concepts where I have to go, I don't get it yet. What's not clicking? I'm missing, there's some opaque area in this thought process, and I'm missing that, and it's not letting me go A, B, C, D, E. I'm going A, B, E. Wait a minute. How did I get to E? How did I get to E? So sometimes I have to like bang my head on stuff over and over and over. And in that banging of the head, there'll be some detail, some little gear in there that works a part of a watch in the economic system that I didn't understand before. And now it puts all these other things into perspective, like, oh, that's why. Okay, of course that's why that is, because now I have this little gear to put in. Now I see how this one moves this one. How are they both going the same way? Oh, there's a little gear in the middle going the opposite. Got it. Now it makes sense. And most people are too lazy. So kind of the point of today is I want people to be brilliant at the basics. And I also want everybody to know that everybody can be brilliant at the basics. And that makes you smarter than the smartest person in the room. If you are brilliant at the basics and you have a good fundamental understanding and your assumptions have concreteness, because certain things are correct. You are right on certain things. Don't take that too far, but on the foundation, you are right. You this is correct. This is correct. This is right. You know these things. Therefore, your assumptions are going to be high IQ assumptions because you're brilliant at the basics. So you gotta sometimes unwind some of your assumptions and presuppositions. Make sure that they are based on the right fundamentals. So the roll up your sleeves thing. So there you go. Okay, so that's why we're going to talk about gold a little bit today. I know it's not directly Bitcoin and all this kind of stuff, but you guys know we're going into a bull market, and it may be tumultuous and crazy, but it's going to be a good one. And you want to make the best out of this. You have to take off your bear market pantalones and put on your bull market pantalones. Overalls? Something. Anyway, whatever, a nice something, because bull markets are a lot more difficult to navigate than bear markets. Bear markets, you look at the projects, you look at quality, you measure up, you make some assumptions, you say, okay, listen, this has got a good chance, I'm going to put some cash here. So it's easy when nothing's going on. It's easy. I know it sounds crazy. It's easy. Put on your bull shirt. Oh, that's good. We should make a bull shirt, a digital investor bull shirt. Maybe that'd be cool. Anyway, bull markets, when things are going up, this is where when you sell something, you might have missed a top that you don't know where it can go to. We don't know. If Bitcoin's 200K this time next year, a lot of people are going to be butthurt. Oh man, I missed it. I should have. Yeah, I hear it all the time. I should have done this. I should have done that. My eye. But, if people that say I should have, they would have. If they would have. They didn't because they weren't ready to. Hi, kitty. What are you doing, Bubba? The big cat's nearby. Hey, buddy. He's been very bad lately. Very bad. He peed the couch. He crapped the couch. He peed beside the couch. He peed in the gym. He has been on a rampage. Yeah, that's right. You can't control a lot of stuff. You can control your portfolio, and you can control your entries and exits, and you can control your fundamental theories on science and economics. What you can't control is that big spotted son of a bitch right there. Uncontrollable. Anyway, okay. Yeah. What we're gonna probably do it, the NFT from the show that we did. That was a fun one, man. Okay, so let's talk about gold then. I don't want to talk about markets. We're gonna go. You guys know, everybody here has been staring at those markets for the last 5 days anyway, probably for the last 4 years. So we don't need to stare at markets today. We'll get to that tomorrow. Trust me, Brandon will have some cool choice stuff. Real quick, by the way, there's a lot of stuff coming. There's a lot of hypercycle news coming. There's twin news coming. There's Libra news coming. I don't know what will be tomorrow coming, but I think there'll be some hypercycle news. There are pools coming for hypercycle. That's going to be awesome. So for those of you that have the node factories, again, those are hypershares. You took your licenses, you married them to tokens, and now you're tilling and waiting to participate in compute. There's some cool stuff there. For those of you that don't have the equipment to do tilling perhaps, and you're worried about that, there's a solution for that. Tilling as a service is coming from HyperPG, and you'll be able to just plug in and start accumulating. Yes, still waiting to build hypershares. Don't do anything until Brandon tells you. Don't even take my word for it. Brandon will tell you when it comes up. Also, though, we'll announce it in the chats. So those of you guys that are on the chats, the digital private client chat and the digital investor chat, he will announce through there as well. So you'll get all that. So, but anyway, there's good news coming. And you guys are bird dogging those markets all the time. So we don't really care about markets today. But what we are going to talk about is this inflation debasement argument for gold. And listen, I came from the gold market, so I'm not a gold hater. I just go where the money at. And right now, I don't think that where the money at. I know people that are making a lot of money right now melting gold, but they're not keeping it either. They're selling as fast as they get it. So Keep that in the back of your mind. And let's talk about some gold. Let's talk about some debasement. Let's talk about some inflations.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
All right. So we are now on this path. I got some cool little. Okay, yeah. We're fine. So, we are going to explore a very widely held belief, and that is that gold is the ultimate hedge against inflation. And this has been, I mean, it's probably why I got into the gold business. Well, one, it's just cool. Gold looks cool. No, I'm not a hater there. Gold coins look cool. Gold in the water looks cool. These treasure, right? It's treasure. This idea that gold is the ultimate hedge against inflation, we have to challenge that. And look, it may turn out to be, but it may not. So gold has been seen as this kind of timeless store of value, and it's a way to protect your wealth from the eroding effects of rising prices and bad governance. But I'm not sure if that's true. And if it's not true, could the answer be that it's a deflationary instrument? So we kind of have to dig into that. People are like, well, isn't deflation the exact opposite of inflation? Not exactly, because the effects and the causes of inflation are different than the effects and causes of deflation, right? The outcomes are quite different, and they're not diametrically opposite. So it's not a 180 skew. So let's define what we mean by inflation. Inflation, we will call it, for the sake of our discussion today, the general increase in prices and a decrease in purchasing power over time. The always and everywhere phenomenon of a general increase in prices and a decrease in purchasing power over time. So when your dollars buy less than they used to, we would say we could be in an inflationary environment. But that doesn't mean inflation. So simply being able to buy less don't mean inflation. It can, but that's not a specific if this, then that. It's not an if-then statement. So when dollars are purchasing less than it used to, and we're seeing debasement effects, people look for assets that might hold their value. They look for real estate, they look for gold, something to hold value. They say, well, they aren't building any more real estate. They build more real estate all the time. They go straight up. They're even talking about hovering, floating real estate. So they're not building any more of it. They are actually always building more of it. But since ancient times, gold has had a specifically cool kind of intrinsic appeal. It's scarce, it's durable, it looks badass, it's used in a bunch of different forms of actual currency, and it could be called a money, right? Because you can exchange, you can use gold to wipe out debt, to extinguish debt, and right? And what do we consider money as anything that can extinguish debt? Currency is government issued things that can extend units that can extinguish debt. So people think gold's price rises with inflation. They think that's a constant thing. We know that's not true. You can look from 2010 to 2020, and that's clearly not true. It's not even close. It didn't track anything, not debasement, not nothing. It went the other way. But people do believe, the general belief is that gold will over time rise with inflation, and as cash or currency units lose their purchasing power, gold would retain that. You know, what is it? An ounce of gold should buy a fine man's suit. I mean, you'd probably get a couple suits right now for an ounce of gold. I'd say 10 years ago, maybe you couldn't get a whole nice suit. And there were times in the, from the GFC and where you're like, it's up, it's down, it's sideways, like what's going on? So, the simple theory of gold protects purchasing power doesn't quite gel with reality. Okay. History shows us that gold does not consistently rise with inflation. And so if you go from 1980 to 2000, and this was a period where pretty much no one would argue that there was high inflation there was high inflation from really 70s into the 80s and then up to 2000. Pretty consistent inflation. And gold's price went down. It declined. So if gold were an inflation hedge, you don't think it could get it right in 20 flipping years? You would expect prices to climb, right? Even if people were a few years behind the trade as the broader economy rose. Nope. Did not happen. You're like, wait a minute. So that's kind of a chink in the armor. Gold performs differently depending on all these other factors like interest rates and kind of exogenous economic factors. So as an example, during high interest rate periods, investors might prefer bonds, government debt, safe, right? Which offer safe, liquid, reliable returns, making gold less attractive, right? When interest rates are low, like we were talking about earlier, gold starts to look more appealing as there is no yield for that gold to compete against. So you're not looking at that gold as a non-performing asset. It's kind of the way I look at Bitcoin. In a sense, Bitcoin's a non-performing asset unless you're monetizing it by selling options against it or something like that. I look at Bitcoin as a kind of dead money, but a better hedge. This is a little bit different argument. And the Bitcoin argument is different than gold. There's similarities, but it's a different argument. But let's think about what we talked about earlier. Why might gold look more appealing in a deflationary scenario? So where things get kind of interesting is instead of viewing gold as purely an inflation hedge, some people could argue that it behaves as a deflationary instrument. So meaning that it gains value in times of economic slowdown or deflation rather than inflation. So in a deflation situation, prices will fall, purchasing power of cash rises, your currency units. People hold on to their money instead of spending it. And financial assets, especially the riskier ones, they start to lose value because people are not out there flipping and spamming and gambling. Dummies are going to dummy, obviously. But we're seeing it right now in the meme coins, things like that. But sane individuals will not. And so gold in these kinds of times, these kind of flat, low interest rate environments, gold tends to gain value. And it's not as a counter to inflation, but as a safe haven asset when everything else just feels risky. You're like, well, shit, worst case, I just put it in gold, throw it in the safe, or trust that somebody's depository has my gold, which don't trust that. And you think back to the 2008 financial / monetary crisis, or the early part of the pandemic in 2020. Gold spiked not because of inflation, but because of fear and uncertainty. Because then it settled. Look at the time period between 2008 and 2020. Gold was dead as hell. It's almost 12 years of nothing burger. And you're just like, wait a minute, but what about all the money, all the stimmies, all the great? No. No. So what's the best way to think about gold? Gold is not your inflationary hedge, but rather it is an asset that responds to broader economic fear. It's a fear trade, not an inflation trade. Could inflation make you scared? Yeah, but it's not like, Venezuelan inflation would make me scared. And I'd rather hold gold than Bolivar, but that too shall pass, right? So gold holds value when people are worried about the stability of the financial system, not necessarily when inflation alone is rising. And gold can act as a flight to safety when other assets are either too volatile or they're dropping in value. And that's not the same as being an inflation hedge. Does that make sense? So part of the appeal of gold as the inflation hedge is psychological. It's better to think of it as a fear hedge. A fear hedge. Bitcoin is a mismanagement hedge, a bad fiduciary hedge. So these are two different hedges, aren't they? Again, this is one way, this is kind of how I look at it. Bitcoin is a hedge against stupidity and bad governance. Gold is a fear hedge. Shit, buy some gold. Well, the more you understand the gears, the less fear you have. Gold is an emotional trade. And I'm going to say this too. It's an uneducated emotional trade. It is what it is. It's a trade that you would make if you're fearful of things you don't understand because you look at this big murky economy and you don't know what you're looking at. The more you understand it, the less necessary your fear hedge is. And then you want a mismanagement hedge. And gold ain't that. Bitcoin is the mismanagement, the bad behavior hedge. Yeah, that's good. That's right. Kirill nailed it. Gold is hedging FUD. But remember, fear, uncertainty, and doubt don't make it's. Someone might be scared, uncertain, and doubtful, and they can be correct about that. But yes, it's a fear hedge, right? These are different. So it's people say, oh, instead of gold, have Bitcoin. Nah. If you need that, if you need the psychological, walking stick of gold, have some gold in your account. Know that it's mostly a dummy trade. Know that it's mostly a end of the world dystopian goddamn nightmare trade. But if that makes you sleep better at night, do it, right? Gold's history as money and a symbol of wealth makes it pretty easy to see as a hedge against threats, against panic. And every now and then that will line up with inflationary periods, but not always and not recently. So this view is kind of a narrative. Gold is a narrative emotional trade, right? Rather than a consistent economic evidence-based trade or hedge. People gravitate to gold because it feels like an asset that should protect them and make them feel warm and fuzzy at night. So while gold may have some protective qualities, occasionally it's not a reliable inflation hedge. So if you're going to own something, just know why you own it. Know why you own it, right? And understand it's not the inflation hedge you think, but it might be a nice deflationary tool. Don't be driven by fear, right? Even as the price goes up, don't FOMO. As the price goes down, don't panic. Just understand why you own the things that you own, right? Gold ain't the inflationary hedge you think. But if you feel like you need a hedge because you can't sleep at night, gold might be it. It's an uncertainty hedge. It's a panic hedge. Bitcoin is a mismanagement hedge, a bad behavior hedge. For me, I'll take the mismanagement and the bad behavior hedge. Emotions change. They come and go. They're lies. They're little lies. A friend of mine who is kind of a sports icon in Japan, he told me this. He said, emotions are like lies, the good ones and the bad ones. You make decisions based on as much fact as you have. Everything else has to go away. You shouldn't make financial decisions. Now, I'm not talking about how you live your personal life, but you should not make financial decisions based on fear and uncertainty and greed and panic and a bunch of bullshit emotions. You just can't. Well, you can. You just shouldn't. Right? So, yes, gold's a powerful asset, but it doesn't operate the way most people think. And just going through this in your own mind, thinking about it, why do I own what I own? And it's not just gold. Go through everything you own. Why do I own what I own? Why? Why do I own this asset? Why do I own Bitcoin? Why do I own Ethereum? Oh, I'm going to get rich. That's not a reason. That could be an outcome. That's not a reason why you own it. Why? Do your 5 T's. Can these things achieve use, utility, and wide-scale adoption? Is it scalable? Am I late to this? Like, do your work. And when you understand why you own what you own, you're not a piece of flotsam or driftwood on the water. Now you're like powering through it in a speedboat and you can make decisions and you can feel good that your decisions are based on good, solid, concrete assumptions. And those are sitting on the shoulders of good decisions and game theoretical analysis. And you're paying attention because you realize that your own cognitive biases may get in the way and steer you away from good decision making. If you understand that balance, if you just even are aware of it, you're already ahead of all your peers. All of them, every single one of them, you will melt past them. Given enough time, you will melt past all of them. Then you can be lucky like the rest of us. Over and over, you can be lucky. Which, hey, listen, we should all endeavor to be as lucky as we can to our peers, right? Just be the luckiest person ever. So, all right. On that note, it's kind of fun to kind of deep dive into the theory behind those things. You got to unpack that stuff. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk, strung it on meth grandmother, or Brandon wouldn't do. And we will see you on the morrow. Funny shenanigans. We'll go behind the wall, look at some investment ideas, thoughts, opportunities. And we're getting to a bull market. It's going to be off to the races. It's going to be fun. See you tomorrow.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish.